Welcome back to Alpine Hodler. It's Monday, and as always, I cut through the noise to bring you the Bitcoin stories that actually matter. Calm, clear, cycle-tested, and stay with me until the very end, because I'll share exactly how I'm navigating this market right now. My current DCA strategy, why I'm not expecting a major 30% pullback, and under what conditions I'd add more Bitcoin. Let's get into it. The headline last week came straight from the White House president. Trump signed an executive order paving the way for US 401k retirement plans to include private equity and cryptocurrencies like Bitcoin. This is a huge deal. US 401 AA plans hold close to $9 trillion in assets. Even a modest 1% allocation would represent tens of billions in potential Bitcoin demand over time. Interestingly, the market didn't jump right away. For most of the week, Bitcoin traded in a tight range between 118,000 and 120,000 as traders processed the news. Only toward the end of the week did we see momentum pick up, pushing price to roughly 122,000. That delayed reaction tells you two things. First, this move is being digested by larger players who don't FOMO. And second, the market sees it as structural, not just a short-term trading trigger. It's a shift in the long-term adoption curve, not a meme pump. Let's slow down and look at the details. This executive order doesn't mean every 401k in America can add Bitcoin tomorrow morning. The Labor Department and the SEC now have to define how this fits under ERISA rules, which is the framework that governs retirement plans. That process could take 12 to 15 months, involving public comment periods, industry consultations, and, plenty of lobbying from both crypto advocates and traditional finance players. There are also risks. Fees could be higher, liquidity might be more limited, and the products offered could be heavily wrapped versions of Bitcoin rather than direct spot exposure. If you've been around a few cycles, you know Wall Street loves complexity when it can bill you for it. But here's the big takeaway. The policy window is open. Just a few years ago, major regulators were warning retirement savers to avoid crypto entirely. Now, the conversation is about how to integrate it, not if it should be integrated. That shift in tone is honestly pretty monumental. Bitcoin is trading around $122,000, up from roughly $119,000 earlier in the week. The late-week rally coincided with optimism from the 401k news and broader strength in risk assets. This price zone is interesting. It's just below the previous local high, so we could see resistance here. But the fact that Bitcoin didn't dump back under 118k after the initial spike shows underlying strength. The ETF market is still seeing steady inflows, though the pace has cooled compared to earlier in the year. Meanwhile, open interest in Bitcoin futures is ticking up, hinting at more leveraged bets coming in, both bullish and bearish. Ether also had a strong week, hitting levels not seen since late 2021. This isn't just a Bitcoin story. The broader market is feeling the optimism from policy shifts and macro stability. The 401k announcement is a signal to large asset managers, custodians, and financial advisors that Bitcoin is here to stay. If you manage retirement plans, you now have to start thinking about digital asset products, or honestly, risk losing clients to those who do. That could lead to more spot ETF options, direct Bitcoin trust accounts, and integration with major plan providers like Fidelity, Vanguard, and Charles Schwab. From a macro perspective, we're watching a slow-motion onboarding of long-term sticky capital into Bitcoin. Retirement funds don't swing trade. They allocate and rebalance on schedules. That means once this infrastructure is in place, Bitcoin demand could become far less cyclical and far more structural. I've said it before. The most important changes often don't come with fireworks, they come with paperwork. The fact that Bitcoin is now on the desks of Labor Department lawyers and 401k administrators tells you everything you need to know. These moves don't guarantee higher prices tomorrow, but they stack the odds for long-term adoption. If you're here for the next 10 years, this is the kind of news you want to see. In the coming weeks, watch for follow-up memos from the Labor Department and SEC, plus any early moves from big retirement plan providers. Also keep an eye on macro inflation prints, Fed meeting minutes, and currency market volatility could all influence short-term sentiment. So here's exactly how I'm handling this market right now. I'm sticking to my DCA strategy. Small, consistent buys, no matter the headlines. I'm not expecting a 30% pullback at this stage, so I'm not adding extra beyond my regular schedule. If we do see a sharp, unexpected drop, I'll update you and walk through my approach for adding more Bitcoin at those levels. But until then, I'm calm, steady, and patient. This is only my personal strategy, not financial advice. That's your weekly signal. I'll be back next Monday with clarity, not noise. Until then, stay steady and stack responsibly.